Hey there, and welcome to Greenleaf's first quarter 2022 review. Here, we'll be discussing the retail asset class and provide an overview of what Greenleaf is seeing in the market today. For property specifics, please reference your investment cover page for our quarterly reports on the specific project. If you have any questions, we are hosting a live Q&A session to discuss any and all property-related questions or overall performance. Feel free to email us your questions ahead of time or dial in ready for our discussion. Without further ado, we will begin our discussion on the retail sector of the business.
Thank you very much, Dominique. Thanks for joining us today, everyone. We are excited to go over the retail overview with Andrew here and talk a little bit about what we're seeing in the market, what we're experiencing at Greenleaf, and just some opportunities that are coming up in the near future. So first thing I want to jump into is just kind of what our debt markets are looking like right now. So typically, when we first started, we were finding deals in like the 7 to 8 cap range, and we could get debt in the 3s.
Right. So it made it a lot easier to buy. So it's a lot easier to buy a 7 cap deal at a 3.5% interest rate rather than a 6.9% cap and a 4.5% rate. So that's what we're struggling with right now. So they're kind of closing in on each other. So our margins are getting a little bit smaller right now.
Yeah, 2 years ago, we were very focused on finding opportunities because we knew we had lots of debt sources that were available, especially for tenants in the retail space that are high quality credit, public companies like Dollar General.
Right? Dollar General, Family Dollar. Yeah, I mean, the banks just, they'll throw money at us for Dollar General.
So those rates were lower. And now with rates coming up, we're not only working on finding opportunities, but working on finding that bank relationship that can provide the best debt available for the deal. So we're really working on both sides of the picture on opportunities right now. So the opportunities we are working on, it's really focused around core brands that are growing. We mentioned Dollar General, Family Dollar. We've purchased a couple of these assets.
Yeah, we've closed on our Family Dollar in January, and we're focusing on, anything that has, I call it pandemic and Amazon resilient retail. And so Dollar General, anything with a drive-through. So any type of restaurant with a drive-through is doing phenomenal.
Drive-throughs did excellent at the very beginning of 2020, and
yes.
Now they're still, people love eating in their cars.
Well, our Zaxby's right now, we get offers on them all the time, and I just can't sell them. I can't let them go.
Yeah. So we're looking at these brands that are growing. We need to see growth, and what we mean by growth is there's a presence in the market that they currently have, then they also have a significant capital source behind them that is incentivized to grow the brand and increase its footprint. When we see things like that, like Zaxby's,
Goldman Sachs just bought Zaxby's.
Yeah, so they're at 900 stores, and they're looking to expand.
And I'm assuming Goldman Sachs didn't buy Zaxby's just to let it sort of coast.
I don't think so. I think they want to grow.
Yeah, I think so too. Yeah.
So all the brands that are looking at how do we grow, that's what we're focused on. And that's when we see Applebee's has done that a lot. Their revenues have been fantastic over the past 2 years. Applebee's is growing. Dollar General, we've mentioned that a couple times. They're opening 1,000 stores a year. That's the alignment we want to be with when we're investing with someone. What we're shying away from is really brands that are contracting or not growth focused. If they're not growth focused, for the most part, they start then trying to do all this cost cutting. In cost cutting, you see a reduction in marketing. You see a reduction in the brand awareness. I think that also hurts morale within the company. Nobody really wants to work for something that's contracting.
Well, I think there's also a handful of brands that never quite recovered from COVID. And so COVID, I think, was a real test for the strong brands. So Applebee's did remarkable after COVID. But then other brands who were in that same space, you kind of see a little bit of a decline, and you see them closing more stores, which is it's a clue of who was the actual strong brand going into COVID before it happened.
You have your brand, awareness, and then you also have your leadership team behind each brand that's executing the strategy. So you need both of those to have a successful company and a successful brand. So that's what we're really looking for when we go into these different brands. When we think about our expansion into Florida and Texas, right? So we've done this over the past couple months, and we've already looked at a couple hundred deals in those two markets, which are big markets. So there's about 30 million people in our current footprint of the Georgia to North Carolina. Right.
Big markets, and don't forget very competitive markets
too. Very competitive too. So I don't think going to Florida and Texas is a new strategy that is super inventive, but for us, it is a good opportunity to piggyback on the brands we have that we know and understand.
I think you said our population size now is about 3 times what it used to be with adding those 2 markets. So.
Yeah, so it's about 85 million people between Texas, Florida, and kind of our couple states.
Yes.
So that gives us a lot of opportunity. Obviously, we've looked at a bunch of deals in these markets, and we have one Applebee's that we're currently under contract with and going forwards on. That's in Killeen. That's one of the top performing Applebee's that we've looked at.
Yeah, I think it's actually the #1 performing Applebee's we've ever looked at Greenleaf. It's a $4 million store, which is
just
their Applebee's is like a $2.5 million store.
Yeah, and we're looking at everything from their revenue to their
Right.
placer data to sales to just it's a great performing asset that we were able to find in Texas as we expand.
Oh, and as a side note too, like our Applebee's Killeen deal might be our debt on that one right now is 4%. This might be the last of the 4% debt we get for a while too. So
yeah,
it is,
there's that aspect of it too. It's at points in time you're like, how much debt can we lock in? We're doing that across all of our assets, really making sure that we have the best rates we can for the long term.
Right, because if debt rates are going up and cap rates are even stagnating or staying still, our margin on every deal is going to get smaller and smaller. But so in a sense, cap rates have to go up if interest rates go up, but we're not seeing that right now.
Yeah, not
which is
yet.
tough. Which is really tough. It's got to happen eventually, but we're not seeing it yet.
Correct.
Yeah.
All right, next point is on distribution. So this quarter, all of our deals paid out their preferred returns. We had a few deals that paid out profits as well. So that is a good start to the first quarter of 2022 if we're getting into some profit distributions right away. All the cover pages have the exact details on what those distributions are, but they should all hit today. So in the 20th, all of our distributions going forwards, they were that last quarter, and they're that going forwards, that distributions are all going out on the 20th of every end of quarter.
Yep.
We're also going to do a live Q&A on the 26th. So if you have time to join us there, we're going to touch base on any kind of deal-specific questions or strategy that you may have, or questions about what we're seeing going forwards. We're also going to go through just a little bit on upcoming deals and the timing of that. We have our O'Charlie's sale that's going to happen here in the next couple days. So
Next week.
yeah.
Next couple of days. Yeah.
So it'll be out in a couple days that the O'Charlie's does sell, and with that we'll be looking at a 1031 option. So there's going to be questions around that as we get to that sale point, and anyone that's invested in that specific deal will have additional information as we get to the closing, as we look at the 1031 options and exactly what the financial returns are. But right now it's looking about like a 10% IRR. On that deal.
And with O'Charlie's was an example of exactly what you were talking about. We tried to get an early renewal on O'Charlie's. There's about 2 to 3 years left in the lease, and we couldn't get it. And so, rather than take the risk of the renewal, we just decided to sell it and reduce that risk. And, honestly, just take a base hit. A base hit is, if we could do a base hit every time.
Yeah, it's good.
Yeah.
And our strategy on a lot of the retail opportunities, if we can buy a brand that is expanding and growing with a shorter term lease, we can then go through the renewal process and obtain a longer lease, and that's the value creation play that we're looking at.
Yeah, in fact, one of our brands actually did call us a couple of weeks ago and said, "Hey, would you like to do an early renewal and a longer renewal?" And they, of course, want a little bit of investment, but they want to actually go into we might move this lease from a 4-year lease to a 10-year lease, and that would create a lot of value.
Yeah, and that's really the strategy. But if we have a 10-year lease to start with, they're not going to go to a 20-year lease.
And what's nice is they came to us and asked us, so we didn't even have to go to them. So they're currently thinking about that too, because they want to get a longer lease. They want to actually have us invest in them and invest in the business, and so then it becomes more of a partnership rather than just a landlord-tenant relationship.
All right, so if you can join us on the 26th, we will have a link in the descriptions on stuff that you can click on to register for that, or just get the link to attend that, and we'll also have an email that goes out with all the information on it. Thanks for watching. Hope this was helpful on our retail update for the first quarter, and we'll talk to everyone on the 26th.
Thanks.